The global financial system is entering a transition that most people still do not see. Headlines talk about inflation, interest rates, and political conflict, but none of them reveal the deeper shift happening underneath the surface. That shift is digital, programmable, and designed to replace the slow and fragile money rails that have controlled the world for decades. The next 10 years will be remembered as the period when old trust systems collapsed quietly, and new digital infrastructure replaced them in full view. This transformation did not start recently. A decade earlier, three forces collided: government seeking more control, institutions seeking more efficiency, and millions of people seeking financial security. That collision opened the door for cryptocurrency, but not the hype-driven assets of the early years. The winners were the networks built for real utility, real settlement, and real integration with global finance. For decades, cross-border payments depended on outdated systems. Delays, high fees, and liquidity traps created friction across every corridor. As global debt surged and currencies weakened, trust in the old structure slowly eroded. People in developing countries began adopting digital dollars not for speculation, but for survival. Stablecoins became a parallel financial system. Remittances moved on blockchain rails. Capital controls became harder to enforce. The shift had already begun. Institutions saw the same writing on the wall. They discovered that assets could be represented digitally on ledgers that settled in seconds. Treasury bonds, real estate, commodities, and private credit could move instantly with full transparency. Tokenization was not a trend. It was a requirement for a world that demanded speed and constant liquidity. The race for the new settlement layer began. Not all blockchains were built for that purpose. Bitcoin became a store of value. Ethereum became a programmable infrastructure layer, but neither was engineered for global settlement at scale. That left a small group of networks created specifically for cross-border movement and institutional liquidity: XRP, XLM, XDC, and a few others. Their purpose was clear: provide the speed, finality, and interoperability that modern finance demands. Settlement became the most valuable use case in the digital economy. Liquidity on demand became the mission. Networks that could connect banks, fintechs, stablecoins, cbdc's, and tokenized assets positioned themselves at the center of the next decade. These chains did not aim to replace banks. They aimed to upgrade them. By the early 2030s, the world will speak less about cryptocurrency and more about digital money. Digital dollars, digital euros, digital yen, and regulated stablecoins will dominate global commerce. CBDCs will operate domestic monetary systems, but the crucial layer that connects all of them will be private settlement networks that operate independently from any single government. This is where interoperability becomes the decisive factor. The networks that mastered efficient, neutral cross-border settlement will serve as the invisible plumbing of global finance. XRP stands in that conversation because it was engineered from the beginning to solve exactly this problem. It moves value the same way the internet moves information, and it does so without the friction that defines the legacy system. The decade ahead will not be about which coin produces the largest price spike. It will be about which networks run the system behind the scenes. Some chains will disappear. Others will become global standards. Tokenization, stablecoins, and real-time settlement will merge into a single liquidity layer that the world will depend on. Money is being rewired. The change is already underway, and those who understand these shifts early will witness the rise of a financial system that operates 24 hours a day, settles instantly, and connects every major market on the planet. This is LTL Productions. Stay informed. Stay early. Stay ahead.